Is the 4-year Bitcoin cycle theory over? Is it dead? Does Bitcoin still behave like it did in the past, that we wait from halving to top and we go back from halving to top? Or is this something for the history books? In this episode, I will present you 3 good arguments why I believe personally that the 4-year cycle could have come to an end. And this is a video I have been wanting to do for a while already, because I have seen these patterns evolving, and as the days go by, it gets clearer and clearer to me that these 4-year cycles might be not in place any longer at this point. But before we start, I want to say thank you to all of you who are here again with me today with Simple Crypto. If you want to support me, please leave your like down below now, and also subscribe if you haven't done so yet. I know it has been around 6 weeks since I brought my last update, but as you know, this is just a hobby of mine. So I have had a lot of things going on in my personal life. I had a lot of other things to do. So I'm really trying to get more updates out now again on my channel, but it's very hard for me to promise. So more people subscribe to this channel, the more people that like my content, the more motivation I also get to push out these valuable thoughts that I have from my experience from 9 years in crypto now. So if this is an interesting topic for you, let's move right into it for today. First of all, we look at these cycles, and if you want to look at them yourself, you can find them at BitBo, exactly this graphic here that I show here in this video. You can see the same. I will link down below this page of BitBo, so you will also find this. And what we see here is these 4-year cycles. We see that every halving kind of afterwards, we have this run up to the next top, as you see here and also here. And what we observe by not doing any calculations, but only looking at this, is that the first rallies have been much more intense, and they went very high, very fast. You see also here, after the halving, there is about 1.5 years time until this top was reached in this cycle, and also in this cycle, in the legendary 2017 cycle that many of us has been the first cycle for, that we saw this really strong run from Bitcoin. Last cycle was somewhat different, because we remember that here where it already got red, was the time when Musk suddenly accepted Bitcoin for buying Tesla. He suddenly put Bitcoin in his bio, and so on and so forth. So this was the time when Bitcoin overvalued very fastly, and it really went up much higher than expected very early, and had this small bear market in the middle just to go up to one more even higher top. But what we see here is that the volatility has been decreasing. It has been decreasing substantially, and it looks almost going up linearly right now here. But keep in mind that this is a log chart, so this has a normal linear chart on the years, but it's a log chart here for the price, so it always looks more like this to reflect the percentage changes better that we are looking at. So what can we see here is that the volatility is decreasing, and I will explain why this is just natural. It is just natural that this is happening, because when we think back the first 4 years of Bitcoin, and it was actually not 4 years, I just checked it up with ChatGPT to tell me the exact dates. In reality, it was only 3 years and 10 months, or almost 11 months. And the other cycles were even shorter than the first one. So it was not exactly 4 years, but in the first period, we had 50 Bitcoin block rewards. And this means that in the very first block of Bitcoin, 50 Bitcoin were found. And in the second one, another 50 Bitcoin. So from the first block to the second block of Bitcoin, the amount of Bitcoin in existence doubled. It just doubled. The third time a block was found, was 50 Bitcoin again, and the supply increased by 33%, and that went on and on and on until the very end of this cycle and the block height of 210,000 blocks. And if you do the maths here very easily, I did it just here in Google, you take the last 50 blocks that have been added, right? And you see how small of a change to the supply of Bitcoin actually made. That means with the static Bitcoin rewards in each cycle, the rewards per block are getting less important to the total supply of Bitcoin, which is this stock to flow ratio. So stock is what's already existing, and flow are the Bitcoin that are coming additionally on the market. And this is getting smaller and smaller all the time. So, and what happens next when the halving had occurred? It's an even extremer effect because the rewards are halved on top of that. So the relative increase of Bitcoin per block gets exponentially less with each halving. That's the theory, and that's mathematically super easy to prove that this decline in new Bitcoin leads to less, obviously less flow related to the already existing stock of Bitcoin. And this sharp decline in Bitcoin is actually the reason for these cycles that we see. So every time the supply shock afterwards hits, every time the flow is getting significantly lower, we see an accelerated increase in the Bitcoin price. But in long term, the effect of this is getting smaller and smaller, because if it's anyways a tiny number and we have that tiny number, it's still a tiny number. So we are getting in a situation now in the fourth cycle where this new flow is slowly but steadily getting irrelevant to the whole amount of Bitcoin in existence. Let's look at another model here. It's the typical Bitcoin halving spiral that we all have probably seen on social media somewhere. And it also shows the halving cycle. So it starts here with the first, second, with the first cycle. And this is the first halving here. Then we go on to the next cycle, and we see that it's always never touching. It's never touching the former cycle. So whenever you invested in Bitcoin 4 years later, your value will have increased substantially, which is great. And I predict here in this video that this is continuing that way. I'm pretty sure this will continue. However, the volatility will sharply decrease, and it will probably decrease much more than many people think right now. So the farther we look back in history, the more we see that this is spiking around. It's going much above these lines here that mark the price levels also in a logarithmic scale. And you see here it jumped above to this 19,000, which was the 2017 cycle. And it was much above this 10,000 line, and then it fell below it again. And you see here the 100,000 line, which has been touched here many times by now. And the further we get in progress, the further we will see that we probably stay inside this cycle out here because of the progression of this Bitcoin network and the Bitcoin power law, which is something that I want to show you quickly next. Perhaps you have seen the power law, and it's anticipating that, for instance, the price is always to the power of 2 from the addresses. You can calculate the price. This is a very interesting observation by Giovanni Santostasi, similar to these other 6 power laws that I show here. So there are several relations which always work as the power of another variable inside the Bitcoin network. So with as time progresses, addresses increase with the power of 3. This is what he has observed in over 12 years of studying Bitcoin. And as the price increases, the as the addresses increases, the price increases with the power of 2. So also this model is predicting that Bitcoin goes up. It predicts that it goes up in the long run. This is the power law model also on the page Bitbo that I will link you in this video. And what we see here is the same as in the other graph that we looked at before. We see that this volatility of the circles is just decreasing. Don't be fooled by this chart. It looks like the circles are getting shorter, but actually it's the x-axis, which is also logarithmic. So the years are just getting shorter on the how they are shown, right? So, but we see that while in the early years we reached this upper line and the volatility is just decreasing here. However, the long-term power law is the green line in the middle, and this is the expected price of the power law. The power law doesn't predict any price at all. It only predicts that this is the average price that Bitcoin will dance around in the long run. And if you look, for example, here I have it now in July of 2029, Bitcoin should be somewhere close to 435,000. I don't say that this will be the price at this day on the 27th of July 29, but this will be the benchmark price. And as you see, it can go very, very much higher than this power law predicts, but it also can go much lower. Giovanni says that this lower line is much more accurate than the top prices here. And now we come to my second argument. As you see here, that the price is dancing around this green line, which is constantly contracting. So it's getting less and less volatile the further we go to the future. And in the same pattern, you will see these 4-year cycles diminish. I don't say that this is really the last 4-year cycle that we see, but probably the next one is getting even less recognizable than this one, and it will go on like this in the future. Let's look at the chart quickly here. This is Bitstamps Bitcoin chart. You see, for instance, here from the lows in end of 2011 until the peak in end of 2013, we saw an almost 30,000% increase in Bitcoin. And in the next cycle, it was 3 times less. This is actually a similar pattern that we see here. So we see 29,000% increase here. Next cycle, 2016-17, we only saw close to 10,000% increase. Last cycle, we saw 3,200% increase, but only if we cheat. And I cheated here because I said if it wasn't so overheated because of the Elon Musk story and everything, then Bitcoin would have had its natural top somewhere here in the middle, probably closer to the end here, somewhere in September, October, and it would have gone very close to 100K at this point. And this time I'm expecting again 1/3 of the last cycle, which will take us to maybe 173,000. I'm not a moon boy, but I'm very optimistic now. And also, since the 4-year cycles seem to be over, it could be that Bitcoin sees a more steady but stronger increase as well. It's very, very hard to predict. However, we will go back to this power law level most likely. So when you look at the power law, you see that we could end of 2025, we could reach something like 130, 140,000 with the expected, the natural price of this living organism of Bitcoin, as Giovanni phrases it. From there, we could just see it dance closer and closer around this green line. However, let's be realistic and also not shocked if we go back to 70 or 80 somewhere later. It's certainly possible, but the longer it takes, the more unlikely it gets that we ever see prices again in the 5 digits range later. So in case it wasn't clear yet, the further we progress, the less relevant these factors that are programmed in Bitcoin get. And on the other hand, this is my second argument for the end of the 4-year cycle, the stronger market forces get. So on the one hand, the effect of these programmed features of Bitcoin is declining. And on the other hand, the market forces like sentiment, like macroeconomic outlook, recession, etc., this is all getting stronger. And therefore, Bitcoin is more and more dependent on these market forces. And last but not least, the institutionalization of Bitcoin is my third argument, because Bitcoin ETFs are holding, meanwhile, 6% of the whole supply, and it's just increasing. We see Michael Saylor, we see other big players acquiring Bitcoin, and this will lead to a shift in the allocation of funds. It won't be dependent as much on the 4-year cycle any longer for this reason as well, because these players are not acting looking at the cycles. They have an allocation policy of how much capital they allocate to which asset, and Bitcoin is now just one of them, and they will not act according to these halving cycles. So this being said, I hope you liked this video. If you didn't yet, then push the like button please below, and I hope you subscribed, and I wish you a wonderful day. YouTube thinks you might like this video or this video, and I will see you very soon. Your Alex.